right, welcome to the December 2020 monthly market report. We've got a lot that we're going to talk about. We're going to try to do it in about 20 minutes, but we're going to take a look back at a couple of things happening in November, start to look at pricing, a big question out there, and then we're going to look into 2021 in a number of the things that we're going to cover today. So we've got a lot to cover in just a few minutes to do it, so let's hop right in. I'm going to go ahead and share my screen here, and we will start out with a quote. Let me get it shared here. All right. From move.com, it says buyers and sellers quickly jumped back into the market this week after taking a break during election week, according to Realtor.com's weekly housing report for the week ending November 14th. So just a little perspective on the election, maybe folks putting their hands in their pockets saying, we'll wait and see how this kind of turns out. If we look at this from a graphical, perspective in our, housing market recovery index, that we've been looking at all over, the summer during the pandemic, the four components of this: demand, supply, price, and time on market. We see that slight dip, but we see it coming back. Now, why is this important? It's important to remember right now that we've settled into a very nice market. We've gone through the dashboard of, pending deals up, showings up, purchase applications up. The one thing down is inventory right now, but settling into a very nice market, still above that February 1st baseline that we saw earlier in the year. Another topic that's been in the news recently is forbearance, and we'll talk just a minute about this. We've seen it kind of go up a couple of weeks in a row. We're going to continue to watch that, but the story here is that over the last several months, the number of folks in forbearance, the number of people that are in active forbearance, has dropped quite dramatically. Now, we are starting to get a look at what's happening to people as they come out of forbearance. We've updated you on that. We've got a look from the MBA right here showing what happened as people exited from their forbearance plan. You can see a lot of green there, blue and red. The green, 54.6% of the people paid in full. They either made their monthly payments during this, they paid off their loan, or the past due payments were brought current upon the end. Those are folks that maybe opted for forbearance, but didn't need it and were able to kind of weather the storm that way. The blue you see there, those are in some form of workout. 30.7% of those that went through a modification or deferral in their loan, and so those are folks that are saying, hey, look, it did what it was intended to do for us. The red there, 14.7%, are in some form of trouble. Either they don't have a loss mitigation plan yet, or they're in some kind of short sale deed in lieu type of situation. So why is that important? The 14.7 are the ones that could turn into potential foreclosures. If they have equity, they can go ahead and sell and and liquidate the asset of their home. We certainly don't want to see that to happen to anyone, but this is a highlight of the point that we need to continue to talk about this topic of forbearance for those that are in it and may need to to do something coming out of it. Many maybe still have questions whether they qualify for forbearance or what do they do in the situation they're in. The CFPB came out recently with the 5 steps to ask for mortgage forbearance due to coronavirus. You'll have this slide. You'll have the links below in the notes to go there, but kind of lays out, reaching out to your servicer. Are you eligible? Is the individual eligible for forbearance, and then what happens at the end of forbearance? All the questions, all the things you need to ask as a resource as you talk to people that maybe need to, engage and talk to their lender about forbearance. So a couple of things that are happening here, as we kind of kick off the month of December as we end 2020. One of the other stories, that's starting to pop up is, are prices going up too fast right now? Are we seeing appreciation at a level that is asking many to say, can we sustain this in the market? And so I want to take a look at that and talk about that for just a minute and give you some data and insight around that. I'll start with a quote here from Craig Lazara. It comes out of the Case-Shiller report that most recently was published. He says, housing prices were notably, and I'm tempted to say very, strong in September. The National Composite Index gained 7% relative to its level a year ago, 7% appreciation. Our 3 months reading since June of this year have all shown accelerated growth in home prices, and September's results are quite strong. So we're hearing this, we're seeing it in a number of different places. Maybe a question in your mind, maybe folks that you're working with are asking, or maybe those of us in the business are saying, okay, is this something I need to be worried about? What's going on with home prices, and can we sustain this type of appreciation? Now, I want to give you a little perspective. Let's look back. If we look at compound annual home price appreciation going all the way back to 1991, we see the average is 3.8% in annual home price appreciation. If we look back to 2012, we see that's been considerably higher, 6.1% appreciation. So when you look at the average going back to 91 of 3.8%, and we look at 7%, it's quite a jump. If we look at since 2012, not as much of a jump, but still above that. So something that we want to keep our eye on relative to appreciation and helping people understand where we're at. Now, the research team went back and looked at, if we were to start at 2000 and look at the historic appreciation, 3.8%, what would happen to home values if that just played out and, the housing crash doesn't happen and just we go through this normal quote market every year? Obviously, that's not reality, but then we went ahead and laid in reality of what happens in the market when, we see this run up in prices in early 2000s, depreciation through the housing crash, and then where we've been kind of going back to that chart since 2012, and where do we see ourselves today? We see that the actual appreciation is outpacing the historic appreciation in this year, maybe somewhere akin to 2003 or 2004. So we want to keep our eye on that. But I want to give you a little bit of reasoning behind why we're in that position right now across the country. And it's a story of inventory and home prices and what has happened to both of those over the last 10 years. If you look at this graph, this shows as the supply of homes on market goes down, the price has gone up. And even where we stand today with limited supply across the country and seeing, home prices go up for a lot of different reasons. Low interest rates fueling buyer demand right now, the different needs that people have through the pandemic for housing, fueling buyer demand. So many things putting pressure, and that lack of supply is keeping upward pressure on prices, pushing them higher. And you saw in the report we looked at before, 7% higher year over year. Now, I'm going to give you a little perspective on these prices, and it comes from NAR's chief economist, Lawrence Yun. He says, such a frenzy of activity reminiscent of 2006 raises questions about a bubble and the potential for a painful crash. It's on a lot of people's minds. The answer, there is no comparison. Back in 2006, dubious adjustable rate mortgages taxed many buyers' budgets. Some loans didn't even require income documentation. And today, buyers are taking out 30-year fixed-rate mortgages. 14 years ago, there were 3.8 million homes listed for sale, and home builders were putting up about 2 million new units. Now, inventory is only about 1.5 million homes, and home builders underproducing relative to historical averages. So when we were back in the housing crash, that oversupply that we talked a lot about over the last several months, led to a lot of challenges in the market. Where are we at today? We're in an undersupply scenario. We're in a very different lending environment across the country, and we're seeing appreciation. So we're going to continue to watch it. We want to give you these insights and this information so that you can help your clients see what's happening in the market. Another headline that I think you're going to see relative to this is, mortgage debt in the country soaring to close to $10 trillion. That's obviously a big number. It'll have many people saying, okay, here we go again. Prices are, appreciating at an unsustainable, rate. Mortgage debt is soaring. If we go look back at the Federal Reserve Bank, mortgage balances, the largest component of household debt, rose by $85 billion in the third quarter and sat at $9.86 trillion on September 30th. Mortgage originations, which include refinances, We're at 1.05 trillion, the second highest volume in the history of the series, and second only to the historic refinance boom of the third quarter of 2003. So as we start to see all these refinances come in, we see volume come in, we're seeing more mortgage debt. Now, it's important to remember that mortgage debt is going to rise as more homes are built and as those homes appreciate and more homes are sold. So what we want to really look at is the debt service ratio, and I've got a graph here provided by the Fed of household debt service ratio for mortgages as a percent of disposable personal income. We look all the way back to 1980, and you can see there where we stand today is lower than where we were in the 80s and 90s, and certainly in the early 2000s when we peaked at over 7%. Today we sit at 3.72% of disposable income committed to a mortgage payment. Why is that? That is the effect of lower interest rates and rising wages. So something to give you a perspective there as you start to see that headline, as people start to have questions on what's happening, not only in prices, but in mortgage debt and where we're heading right now. We've done a lot of work on this, on why there's not going to be a housing crash. In just a couple of weeks, we're going to do a webinar on 2021 projections, and I want to talk about that for just a minute. 2021 projections, and start to look ahead. I think we're all ready to get rid of 2020 and move into a new year and move into life and get past coronavirus and all those things. Jed Kolko, I'll start out here. He says this: above all, the 2021 outlook hinges on the course of the coronavirus. Both the recent virus surge and the election make government emergency relief more likely. He's talking about stimulus there, and stimulus package being more likely. Next year will also start to show whether two big pandemic shifts will endure, from services to goods and from in-office to remote work. Now, let's hold that for just a second. I'm going to come back and talk about that. Even as small shifts in these trends, if permanent, could cause big changes in how businesses hire, how job seekers search, and where people live and how much they earn. So a lot of questions. Certainly don't have a crystal ball to say what's going to happen with that coronavirus. You're hearing as recently as early December here that by mid-year, a majority of the population could be vaccinated, and we're going to have to see that play out and how that happens across the country. But as people feel more I'll say safe, as they feel more confident, as they have certainty, like he's talking about, from in office, I mentioned that, to remote work. I think we started this pandemic off and people thought, well, either people are going to go back to work or they're going to all work from home now. And there's probably some hybrid models in the middle that once people get certainty to, they say, okay, we can live in a different place, or we can make this decision relative to our housing. So a lot of this is going to depend on the path of the coronavirus and what we have going on. Now, we're in a place right now where certainly cases are rising, but I think as we look forward, the thought that always comes to mind is, it's darkest before the dawn. There's hope around the corner, and we're certainly looking to the future for that. If we look at projections for mortgage rates, Freddie Mac has come out with their projections through the fourth quarter of next year, and they're saying we're going to stay around 3% for a 30-year fixed. And whether we're at 2.7, 2.8, and bouncing around there, look at the bigger picture here of where we were in 2016, 17, up to 19, and where we are today. Definitely a favorable lending environment for those looking to purchase a home as compared to, gosh, the last several years. I mean, this year we've gone through 14 lows in the average 30-year fixed as measured by Freddie Mac. And that's not just this year. That's since they've been recording this. So next piece of information from Danielle Hale talking about the volume of homes sold. She says, we expect sales in 2021 to come in 7% above 2020 levels. Now, let me pause there after that blue text. We're going to sell more homes this year than we did last year in the middle of a pandemic. and sell even more going into 2021. Why? Because needs are changing. People are saying, you know what, with these low rates, we're going to go out and buy. There are going to be a lot of people that say, you know, we held off in listing our home this year or selling our home because we felt unsafe or for whatever reason, putting our home on the market and seeing people, you know, buy homes. She goes on to say, following a more normal seasonal trend in building momentum through the spring and sustaining the pace in the second half of the year. While home sales are expected to lose some momentum over the last months of 2020, the shallower than normal seasonal slowdown creates a higher base of activity leading into 2021 that is roughly maintained for the first half of the year. As vaccines for the coronavirus become broadly available to the public and economic growth reflects the resumption of a more normal pattern of consumer spending, home sales gain even more in the second half of the year. So the coronavirus, again, going to dictate what we see there as the vaccine, is made available and gets approved and all those things, and look for, as we go into 2021, more normal patterns. Now, that's yet to be seen relative to the spring and then the summer and probably likely as we get that information and people feel more safe, then you start to see more volume and more transactions. When we start thinking about home prices, we're in an interesting time of the year where we get two types of forecasts this year. We get this time of year, a 12-month forecast and a next year 2021 forecast. Why is this important? They're comparing two different things at different times, but if we kind of take the outliers and look at the middle of this, we're looking at appreciation, I'm going to call it 3-4% in homes, not as much as what we've seen this year, and 7% from experts that are forecasting. Why is that? I think there's an expectation by these experts that more inventory is going to come into the market from maybe those affected by the pandemic, through the end of forbearance, maybe those that have not put their homes on the market, maybe those that get certainty around their employment, and seeing more transactions start to follow that. The question of will we see any disruption of price through foreclosures? Lauren Chun came out and said any foreclosure increase will likely be absorbed by the market. It will not lead to any price declines, talking about those in forbearance and the questions surrounding that. So a lot of things happening. I mentioned, if you want to go deeper on this, on the 16th, we're doing a full-length webinar on 2021 projections. We'll spend an hour going through what experts are saying, unpacking all of that. But that gives you a good idea of what they're saying about the number of transactions, prices, mortgage rates, all the things that are going to influence the market as we go into 2020. If you haven't done so already, I want you to go and download the winter 2021 buyer and seller guides. They're available now. They've been updated to this market, and you're going to want to go grab those. For those that are thinking about buying, those that are thinking about selling in this market, or have put off the decision to do so. I want to use two other points of reference as we close out here today. Lauren Chun just said this winter may be one of the best winters for sales activity. On a winter-to-winter comparison, this could be one of the best breakout years just based on the fact that pending contracts are at such a higher level. As we look at this winter, certainly there's a lot of news coming at us of rising coronavirus cases, other things happening in the world, but it's setting up to be one of our best winters for sales activity. And I think as we think about that, who have you been talking to that's put off maybe buying a home, selling a home the past year, put off doing something for one reason or another? And I'll remind you of this as we wrap up today, the value of virtual events. Eventbrite, a large event company, came out and said virtual events have exploded this year in popularity due to the pandemic, but they're proving to be a high value opportunity regardless. Not only can they be just as engaging and as exciting as in-person events, they allow you to bring together a wider audience. So, as we wrap up, this December MMR, I want to say this. we've got 2021 projections. We're talking about price, a lot of things happening in the market. People saying, you know what, I've been thinking about selling, but I haven't. I've been thinking about buying, but I haven't. Being able to get out in the market right now and do a Zoom meeting, maybe just like we're on right now, and invite everybody that, hey, have you been thinking or have you thought of selling your home this past year? Let's have a meeting. Let's get them on there. Let's invite everybody and educate them on what's happening in the market. Have you thought about buying a home? Let's get them all together. Let's have a Zoom meeting, invite everybody on, and educate them on the market as we wrap up this year, as we go into next year, whether it's with a partner or whatever the case may be. So hope this information helps you do that, helps you be the knowledge broker to the clients you serve. I'm grateful for the time that you spend invested in listening to the monthly market report this month and each month. And we'll see you back in 2021 for January in just about a month. All right, take care.